Rivian stock nudges up after getting the green light for its $5 billion Volkswagen deal. A joint venture aims to create high-tech software for the new EVs from both companies. This is a huge deal because, for one, we knew this deal was almost a guarantee, but now that it's actually been confirmed, it just makes everything even more refreshing. It really solidifies what Rivian has going on. It really solidifies Rivian's importance to the global EV space. And it sets up Rivian for being, a great competitor in this area because they're attracting Volkswagen, brands as big as Volkswagen, damn near the biggest automaker in the world. A German competition authority on Monday gave Rivian the go-ahead to form a new joint venture with Volkswagen, which has been described by analysts as core game changer for the electric truck maker. I would definitely agree with that statement. This is a game changer for Rivian for many reasons. Not to mention, in doing this, Rivian is actually gaining a huge amount of investment from Volkswagen, a partnership, and valuable resources, because whatever they create together will be jointly used by both companies. That's a resource, that's an asset, all while gaining money, funds from Volkswagen. Germany's Bundeskartellamt also approved Volkswagen's move to acquire a $1 billion stake in the Irvine, California-based Rivian. Under the firm's deal, Volkswagen plans to invest up to $5 billion in the company after the joint venture is established. As cars become increasingly digital and connected, the question of right system architecture is nothing less than a key competitive parameter. This is what President Andreas Munt said in a statement, adding that the plans do not raise any serious antitrust concerns. I would agree. Yeah, I don't think that was ever in question. The companies will create an equally owned joint venture. Equally owned. I'm telling you, Rivian, this is a great deal for Rivian. A brilliant deal. So this venture, they said, will accelerate the development of software for both Rivian and Volkswagen. The partnership aims to build Rivian's current software and electrical architecture. Rivian will license the existing intellectual property rights to the joint venture, which is expected to launch during the last 3 months of the year. This joint venture between both companies, Rivian is simply licensing out their intellectual property to this joint venture. Now, if there's other companies out there who want to get involved, then they would have to participate in said joint venture like an investment. But what if Volkswagen wants to use this for their other car brands? Audi, Porsche, Lamborghini, Skoda, Seat. I mean, Volkswagen has so many brands, but are they allowed to use this for their other brands, or is it just for VW vehicles, main vehicles, just the ones with the VW badge? We don't know. We don't know. And that's why I've always said from the start, this is a great deal for Rivian, but if anything, Volkswagen should be giving them more money. It all depends on what Volkswagen gets for the deal. If Volkswagen is allowed to use this technology being developed for any vehicle Volkswagen produces underneath their company name, Rivian deserves a lot more money. If this is only for the Volkswagen brand, then I can see how this deal would be more fair. But what if Volkswagen decide, okay, we're going to use this technology, Rivian, for Audi. We're going to use it for Lamborghini, where we could use it for any of our companies. If that's actually a thing that becomes public, everyone's going to question. Everyone's going to question it. If Rivian really got the best deal, we really don't know because we don't have the contract. We don't know what's the final details. We just know the general stuff. Now, both Volkswagen and Rivian plans to launch vehicles using the technology between 2025 and 2030. 2025 is next year, ladies and gents. We're 5 years away from 2030. So if this license offer Volkswagen and Rivian this 5 years partnership, then could it be renewed after 2030? This is not a partnership for eternity. The $1 billion investment into Rivian, that's up to Volkswagen what they want to do with that ownership. But the 5 years joint venture, both companies being able to use the technology between 2025 and 2030, what happens after 2030? Will there be a renewal? Will there be another joint venture? Who knows? Who knows? But what this article does say is that perhaps most importantly, the companies say that the development from the new venture will help cut production costs. And this is brilliant. This is exactly what Rivian needs. Cutting production costs is the most important thing for Rivian right now because they want to optimize for efficiency. And I remember the part of this agreement between the brands, Volkswagen, Rivian, was that Volkswagen will aid Rivian in how to produce vehicles more efficiently. Because right now, Rivian is losing a lot of money per vehicle that they produce. I mean, it's crazy how much money they're losing. No fault of their own. This is a natural procedure, a natural process in making electric vehicles. It's an expensive venture. And to optimize it for efficiency like Tesla have done, it takes years. It's taken Tesla a good time. You got to remember, the first Tesla vehicle was like 2008 or 2007. That was the Roadster. The Model S was like 2000, the prototype was like 2009 or 2010. The vehicle came out in 2012 or 13. 10 years later, from the Model S, they finally really accomplished the true meaning of optimizing for efficiency. It's only recently they've done that. But in the process of that, they've had to build factory in Shanghai, Berlin. They have at least 3 factories in the US alone. They're trying to build another factory in Mexico. They've had to do so much to accomplish what they have. So for other companies to even compete in the same arena, you have to take the time to appreciate that even Tesla had a difficult time. Granted, Rivian can learn from that to avoid these mistakes. This partnership between Volkswagen and VW reminds me of when Mercedes bought 10% of Tesla. This was a while ago, and Mercedes sold it at a loss. They sold it for like 100 mil at the time, I think. Actually, I can't remember how much Mercedes sold that 10% for, but they owned 10% of Tesla at one stage. 10%. If Mercedes had held on to that 10% until Tesla was worth almost $1 trillion a couple of years ago, Mercedes would have had over $100 billion in Tesla shares. Well, close to $100 billion in Tesla shares. And look at what Tesla's grown to produce since then. You know, they're working on robotaxi, Cybertruck, the semi truck. They have multiple different vehicles, more vehicles that they're planning, multiple different factories. They're working on a robot, energy, software, self driving features, FSD. Who knows? That FSD feature, if Mercedes has held on to their 10%, maybe full self-driving would have been in the Mercedes cars. Maybe the Tesla software would have been in the Mercedes cars. Maybe that joint venture between Mercedes and Tesla would have grown even larger. Who knows? But that's probably the biggest F up by Mercedes in recent years. The other one is losing Lewis Hamilton to Ferrari, but only time will tell how that one works out. But listen, this deal reminds me of that. So if Volkswagen is really investing in Rivian, are they really investing for the long term, or will they just sell the shares when Rivian goes through difficulty in the next 5 years? Because there will be difficult times ahead for Rivian and other automakers. But perhaps Volkswagen intends to grow this ownership. Perhaps they intend to invest more into Rivian. Perhaps they want to buy Rivian long term. And that would be brilliant because imagine Rivian being a part of the Volkswagen brand. You know, Volkswagen actually just gave up like 50% of Bugatti, or while Porsche, who owns Volkswagen, it's complicated. Porsche actually owns some of Bugatti now, or a joint venture between Bugatti, Rimac. It's so complicated. But the interesting thing is that Bugatti, Porsche, they gave up a controlling stake or the majority stake in Bugatti. And I think Rimac has the controlling stake now. So Volkswagen has room to acquire another company, and they have funds because Bugatti is now a self-sufficient company. The cars that they're producing now are actually making profit. You know, it's not just like the Veyron that was losing a lot of money. The Veyron was a prototype to build the Chiron, and then the Chiron was the test to really see if they can make profit. And then they now built the newest beauty out there. That is the Bugatti Tourbillon that will make a heap of money for Rimac and Bugatti. So essentially, Bugatti doesn't really need Volkswagen anymore. Volkswagen can put their attention into another company. And it just so happened that it's now Rivian. So hopefully this partnership grows because I want to see Rivian become a promising company. And I think if that were to happen, if Bugatti were to continue to acquire percentage of Rivian, I think Rivian will continue to be a public company. Why is this? Because recently Volkswagen has been approaching business very differently. For one, Porsche cars are now a public company. They weren't always. And for the other one, they sold the controlling stake of Bugatti to Rimac. But they created a partnership with Rimac. So Volkswagen wants more partnerships. They want to acquire other companies. And wouldn't Rivian be the perfect company? I've always said how it's possible that Apple hasn't bought Rivian is beyond my explanation because Rivian was dead cheap. They still are. They still are in terms of market cap. Apple could buy them without incurring any loss, without any headaches. Apple could buy them rather easy, but they haven't. And that's a huge surprise. But let's continue with this. So ultimately, Rivian is Rivian is aiming to save a lot of money with this joint venture, cutting the production costs, and that's key. And you know I love Rivian, and I love Rivian for doing this as well. So Rivian lost $38,784 for every electric truck it sold between January and March. 38,000? Basically 39,000. It's not like they're losing 5,000 per vehicle, or even 1,000 per vehicle, or 10,000 per vehicle. My goodness. 40, almost 40,000? That's nowhere close to sustainable. We need to be cash flow break even as soon as possible with Rivian. And that's what Polestar is aiming for in 2025 is to become cash flow break even. That's why it was so important for Polestar to launch the Polestar 4 and the Polestar 3, continuing with the Polestar 5 and eventually the Polestar 6 Roadster. Now, Rivian said the initial $1 billion will be primarily used to fund its operation through the production of the new R2, a 45,000 two-row compact SUV with more than 300 miles of range that was announced in March. The company last secured $827 million worth of incentives from Illinois to expand the Normal factory, which currently builds the R1 and R1T, which is expected to start R2 production in 2026. So we're still 2 years away from R2 production even beginning. The funding will also help the company plan to launch a mid-sized platform in Georgia, where Rivian delayed plans for a $5 billion plant that was initially meant to start the R2 production. Rivian is poised to emerge as a future EV leader, particularly as the R2 and R3 have potential to propel the Rivian brand into the American public consciousness. I'd say Rivian is already part of the American consciousness, to be honest. They're building trucks, electric trucks that are actually being reviewed very well. I rarely hear any complaints about Rivian vehicles, if any. Honestly, in terms of an American brand, Rivian is the second Tesla. Rivian is the second Tesla. The slight difference is that they make very different cars. Rivian is making more very American cars, trucks, big SUVs, period. Tesla is making more European style cars for the American market, the Model S, the Model Y, the Model 3, stuff like that. But it's working. It's working very well for Tesla. But Rivian has already announced their R3 and R3X vehicle along with the R2. Now, those vehicles, they're not very European at all. But I'll tell you one thing, SUVs and larger vehicles are actually becoming more and more popular in Europe and worldwide. So I don't think that's going to be a problem for Rivian. But I do remember, but I guess we can all remember when the news was announced, the stock price really went through the roof. And this was in the middle of June, I think. Stock price really went through the roof. Thankfully, that was just before I bought. What a timing. My goodness. But listen, thank you for watching. Subscribe to see more. Leave a comment, and I will see you in the next video. If you want me to talk about anything Rivian related, leave it in the comments. Peace.